All right, everyone. Welcome again to our TDK Ventures 100X. Today is our energy track. I hate to host a panel after our social coffee break because I can feel the energy and power in the room. And today, next, we're going to talk more about power, powering the future of AI data centers. Now we have our amazing speakers lined up here. I'll give a brief introduction of everyone, and probably after this, each of our panelists can give more introduction of yourself. So we have Landon, CEO of Peak Energy. Landon is battery industry veteran from former Northvolt and Tesla, and now he's leading Peak Energy, building probably the world's first sodium-ion fully passive system deployed to solve the biggest crisis in the U.S. power grid and data centers. And we also have Steven Balaban, who is the CEO and founder of Lambda. So I believe Lambda is right now Silicon Valley's hottest neo-cloud AI infrastructure, powering all the GPUs for our AI era, with a rumor of going IPO very soon. And also we have Brad Lee, who is the president of the Ampace. Ampace is a joint venture between CATL, the best top EV company, and ATL, the top consumer electronics batteries company. This is a joint venture working on anything in between. So, and Brad is taking charge of the ESS business in the North America, and right now Ampace have a great solutions for data center batteries, from BESS to UPS and to integrate to the rack. Finally, we also have Milo. Milo is a GP, general partner at DCVC. Milo is also former Tesla and also Zola Energy operator, turning into investor. And now she's taking charge of the decarbonization track in DCVC. So welcome again, our panelists. Probably I will start with the first question, and also you can introduce yourself and share with our audience more about how do you see the readiness of the U.S. power grid for the AI, because we know the U.S. power grid actually is built for the very steady, predictable load. It's been built in 1960s. And now with the gigawatt surge of the AI compute, I would love to start with how ready is our power grid, and where do you play in the grid infrastructure?
Yeah, it's not ready. Yeah. Yeah, I think the scarce commodity on the grid right now is firm power. That it's not just generation. We need more generation as well, but it's really about base generation, firm generation, because that's not just data centers, but electrification of transport, reshoring. All of these things are basically demanding something that's a little bit less variable than what we see increasingly with intermittent generation from renewables. And then on top of that, you already have usage patterns in the grid that cause these like fluctuations. And so the thing that's actually scarce is not actual like generating capacity. If you look at the US grid right now, there's enough reserve margin, like probably about 35% reserve margin, which means that we've overbuilt the grid if you take everything on average, everything was flat. We're 35% over what we need, which is more than enough to build as many data centers as we want for the next 10 years. That's why batteries are such an important part of the solution. That's why Peak Energy, we're an energy company. We're storage native energy company. Like Katherine said, we built the first meaningful, like technologically differentiated product in this space since it was started 15 years ago. It's better, safer, faster, cheaper. And we're focused on that area because that is the scarce commodity. You gotta find a way to very quickly unlock that reserve margin capacity and give it to data centers, to electrification, to cities, to be able to manage that. And then what you'll see is over the next 5 years, supply chains will start to free up a little bit more on other types of generating assets, and the generation can catch up. And that's kind of how we position the company too. We're building storage first. That's what we're going to market with. We've got gigawatts of offtake and first systems in the ground. But the next thing that we're working on is sort of a solar plus storage combined product. I think the vision really for the company is if you look at like the learning rates for both battery and solar, they're falling really quick. That's going to be the cheapest. It's already the cheapest in many places. It's going to be the cheapest in almost every place in 5 years. And so we want to be the first to market with panels plus a storage product, so you can like kind of put a panel on the ground and it's as reliable power as a combined cycle gas turbine. That's the next place that we're going, and you want to catch those trends as you go. So I think that to answer your question, not ready. Way we get it ready: deploy a ton of batteries right now, then deploy a bunch of generation and batteries after that.
Super, thank you, Steven.
Yeah, I'd echo the not ready aspect of it. It's interesting to think about like how do you move the sort of power generation through like kind of space and time, right? A lot of the utilities that you talk to will be fine handing over a couple 100 megawatt PPA as long as you're willing to sort of abate or otherwise like pull back power during the peak times. And so whether it's battery technology or whether it's like full vertical integration into the data center of you can think of everybody using a data center to generate tokens on your chat GPT or something like this, and be able to say, oh well, let's maybe do fewer deep research queries right now, or let's process them at a slower rate, and use that as a way to kind of peak shave. The other ways that we're seeing is that you can, I think that everybody I've talked to in the space, we all generally agree that behind the meter power generation is going to become a much more common activity. So that's, I think you're going to start to see co-located data center power plants, basically, whether, either combined cycle or simple cycle natural gas turbines, solar, battery, electric storage systems, all the different tools in the toolkit to generate behind the meter power to kind of abate. And as far as, a high level overview of Lambda is that we're a AI cloud business. We provide the underlying computational infrastructure for the AI services used by hundreds of millions of people. We have some customers who are some of the largest corporations in the world, and our job is to basically go from setting up all the infrastructure so that a customer can kind of consume on a sort of GPU per hour basis contract with us. And we're now in the process of kind of vertically integrating down. Historically, we've been leasers, and now we're sort of getting into the data center development business as well.
How do you think about portability of load? Like, do you think that's actually for curtailment things? If you have enough time, like, can you shift your load to a different regional data center? Or?
Certainly it's easy to move if you've got multiple data centers. We've got about a dozen order of magnitude data centers in the United States right now, and being able to move loads is a possibility, but of course it does require that the customer take out all those different locations, and
because they may care about latency or something.
Yeah, and so you also have to think about like where the handoff point is between us and a customer, right? And you need to be able to send those signals into the grid. And I think that generally what we're going to see maybe 50 years from now is that we're going to look at this AI build out as kind of similar to the build out of the electrical grid, which is there's centralized interconnects, and there's people add nodes to the grid, and there's this method, standardized method of curtailment, and standardized method of saying, well, let's ramp up, let's ramp down, let's move around. And I think that we're going to start to see a compute grid form over the next couple of decades.
Probably we can double click that on later, because it's a really good, very important question on how the new AI cloud compare with the traditional cloud, and how those like new requirements from the grid. Because we also learned from yesterday and the day before that in the future this will be like not only GPU, but one data center will be a kind of big GPU, and then you will build several data centers all together at the AI cluster. So probably I want to hear from Brad and also Milo on your perspective on how much readiness our power grid is.
Yeah, I agree that it's not ready. And from my work with many data center customers, by the way, before I joined Ampace, I came from a solar background, so I worked with many IPP developers and also the grid. And so I can share a few numbers with you. And so the interconnection queue in the US right now it's over 2 terawatts. That's greater than the entire national generation the capacity. And the transformer cannot be delivered like over 24 months. So when my working with the data center developers, the biggest challenge is not technology, it's power access and the power availability. So if I can break down those challenges, I will see a few aspects. So number one is AI load fluctuation, as you mentioned, because the AI training reasoning can cause megawatt, and the load fluctuation, and the traditional grid cannot handle that. And also power availability. The AI demanding is way faster than our grid expansion. The new side, developers, they can have the land, they can have GPU, but they don't have a power supply for years. So that's the solution, from Ampace side we can offer, And for people, if you are new to Ampace, just quick introduction, So Ampace, we are joint venture of ATL and CETL, founded in 2021. So we are still startup with startup mentality every day. But in just 4 years, we achieved many breakthroughs. We are global #1 in residential energy storage battery. We are global #1 in Joule battery. As you mentioned, we are here to address everything in the middle, from residential, commercial, and energy storage solution for data center. So our solution, we want to offer the one-shop battery, integration. So we build a UPS and a BBU inside the data center to handle AI load fluctuation from milliseconds to seconds. We also build a stationary battery energy storage outside of a data center, to handle the power supply availability from 1 hour, 2 hours, 4 hours. So basically, we have the positioning to offer this one-shop battery solution inside the rack and outside of the campus wall. Yeah, that's our answer. Yeah.
Thank you, Brad. Milo?
Yeah. Hi, I'm Milo Werner. I'm a general partner at DCVC. We're a deep tech investment fund. We've been around for about 15 years. We focus on both early and late. I'm on the industrialization fund with the focus in energy. So this is like a favorite spot of mine. I love this space. Yeah, the grid's not ready. It's going to be a freaking awesome opportunity. Everybody in this room should be excited. I think, for me, probably the most exciting opportunity coming from a viewpoint of industrialization is that we're actually going to add capacity through decentralized systems. And why that's so exciting is that the fastest way to bring new technologies to market is through decentralized, smaller modular solutions. And so this is like a huge opportunity for advanced technologies to come into industry. All the work that's being done here is so exciting. Yeah, we're not ready. It's going to be great. It's going to be a roller coaster.
This is actually exactly my next question, because we're seeing this kind of mismatch of, on the IT side, they're growing so fast. Every year, every 6 months, they're already rolling out the next gen GPUs. But on the facility side, we're so slow, and we have all the problem that we cannot serve the demand. So my next question is actually specifically for each of you, for your own company, for your own position, what keep you up at night? So I want to know, what are the biggest challenges and how you see the opportunities behind?
Well, a lot of things keep me up at night right now. I think, I think the risk that is a little hard to understand here is that if you mismatch, it's a timing risk, right? Because if you get too out of sync with how much you're investing in, like, for instance, data center capacity, or like basically load, right? If load gets really high and capacity doesn't keep up with it, and it's lagging pretty heavily right now, and there's regulatory headwinds against wind and solar. Batteries escape that, luckily, but this thing is getting wider and wider, and it becomes a political risk. And I think what's maybe not fully understood is it's already starting to happen. The PJM auction, capacity auction that happened a few months ago, closed like 10x up year over year. And that gets down to the ratepayers. Like, their bills are gonna go up like crazy next year, and that's a political issue. And so I think so much of our economy over the last year has been just driven by AI. You take that out, take all the AI tailwinds out, we had 0.1% growth over the last 12 months, right? And all of that money and pent up capital, which a lot of people in here are deploying as well, is contingent on that trend continuing. And there's a regulatory risk that if the pain gets too high for common people on rates, that there will be policy that comes and slows this whole thing down, right? And then this becomes a geopolitical dynamic too, right? This is a competition to who can get to AI, like general AI and things like that first. And so yeah, that keeps me up a lot right now, that there's not enough, there's a lot of money that is going into it, but it needs to go much, much, much faster. It needs to be a little bit more balanced with how much we're deploying into like data centers and things like that.
I'd say the big thing that keeps me up, as we're we're standing up these sort of very large scale AI data centers it's obviously a complex coordination problem of everything from, land, data center procurement and construction, supply chain, both inside and outside of the data center. And what you're always trying to avoid related to the regulatory things is, there's certain problems that can be solved through efforts of your own, and then there's the exogenous things that seem maybe a little bit overwhelming. And policy is one of those things that you kind of run up into. And when you look at certain things like interconnect timelines, and you look at whether it's transmission and distribution timelines, you just have to kind of work around it, like just related to the comment on decentralized solutions. I think that anybody who's in the space is kind of recognizing that it's not a good idea to go punch against the sort of regulatory brick wall, and it's just kind of better to go around it. And I think also kind of related to the community support, I think that I think I would like to see a lot more data center companies and companies who are involved in this, doing stuff that looks more like a community dividend. Like if you look at maybe the model that Alaska has for their oil and gas extraction, where everybody in the community gets to participate in the wealth creation. That's how you get around, a new data center build by a large company shouldn't be causing the average person's rates to go up. Right, and I think the communities that are hosting these things and providing the regulatory framework and the regulatory rubber stamps to have it go through should benefit proportionally.
We just had a pretty insightful talk. I think it's Rachel still here from California PUC, addressing many of what you said. Brad?
Yeah, I think there are a few things keep me up at night, and I think the first thing that's the gap between the fast, AI demanding growth and the slow expansion of our grid. So that's poor availability. In the US, to meet our AI goal by 2030, just in one category, meet our AI goal by 2030, so we need to build an incremental 40 gigawatt power supply for data center. And there is no way we can build that power supply with the traditional way. Another big risk, I think, for our grid, that's the grid resilience. Unfortunately, we have this very outdated grid. And I could give you one example. Say, last year in PJM, so PJM probably is the most critical, region for data center. And so last year, July, there was, the 230 kilowatt transmission line was hit by lightning, And suddenly 60 data center, kicked in and off the grid, to supply by UPS and diesel generator. But that caused, the very sudden power drops, 1.5 gigawatt to the grid. That's a big black hole, and that's a real test for the grid resilience. So those are big challenges we are facing, and to meet our AI goal. I agree with you 100%. So I think behind the meter microgrid could be the solution, and that's what we are doing with our customers. And combined, like a gas turbine as base load. I also learned, TDK invested a geothermal company, could be another format of a base load, plus wind, solar, and battery, to offer this one-site power generation solution, on-site power generation solution for data center. So that way we can deliver reliable power availability for data center sooner than later.
Yeah, so we have our geothermal company, Rothertherm, here. Not only that, we have our InnerAttack producing e-fuels, and also we have another company, Spiritus, providing zero carbon data centers, providing direct air capture on site of the data center. So we're literally trying to grab everything, all the energy, all the resources together to build a data center. So Milo, your thoughts?
Yeah. Maybe I'll just pull on a thread from Stephen's comment, which is all these things need to come together to make a data center, right? It's like an orchestration of many different things that all need to land at the same time. And the global supply chains are completely reorganizing themselves right now from centralized to decentralized. So we used to make everything primarily overseas in Asia, COVID happened, people had this epiphany, whoa, it's not resilient. Manufacturing is the backbone of our economy, and it is, really what makes up our middle class. And so as we reorganize our supply chains domestically and remember how to make things, we're slowly building back that muscle on how do we build data centers effectively and build all the things that are required to make a data center run effectively here in the United States. And I think just touching on one other piece that Stephen said was, it doesn't make sense to have a data center come to a community and for all the residents in that community to feel a spike in energy prices, right? And I think not only would this reindustrialization movement coming bring jobs and opportunity for everyday Americans, but it also is important for us to remember not to escalate energy costs while these things happen.
Thank you.
So there's like positive social impacts, I think, from this reindustrialization movement that's important not to forget.
Yeah. I think many of our panelists touched the topic on the regulatory and also geopolitics. So this is actually my next question, very important one, because me as a Chinese living in America, I'm seeing on the both sides. For example, in the past 50 years, in China they have been built 58 nuclear plants. In US, number is 0. And in China, the whole infrastructure is built for the EV. This is before the AI boom. But now all the energy power is ready for the AI. Basically, they don't need to have access to the best GPUs. They can just put 5 Huawei GPUs and still achieve the same or even better training results. So looking back, not only that, and also many topics that I think, Milo, you mentioned about manufacturing in the US, how we can build our own. I would love to hear from your thoughts on, in this new microeconomic background, what is your view of how we can build our own resilient energy solution for the data centers? Because this will be at the final of the AI competition globally, it will be energy. Energy will be the bottleneck.
Yeah, totally. I think one of the long-term risks of not doing this the right way is today our levelized cost of energy, or whatever metric you want to use, how much our electrons cost is substantially higher. Not only are we much slower at installing them in China, they're much more expensive here. And that's because our cost of installation is much higher and a lot of other things. And also we don't make them here, so we import everything. And that's a problem because AI is turning it's the first time in history where calories in aren't the only things that generate productivity. It's increasingly going to be electrons generating productivity, and that is your economy will be less productive if your electrons cost more. And so I do worry that overly focusing on thermal generation because it looks cheaper in some places right now, and but it's not getting cheaper. There's no learning rate on gas, and the other technologies that are being installed predominantly in other markets, and we're doing it here, but we're doing less of it now. Those are the winning technologies, and so I worry that we're installing a lot of assets that will generate electricity less effectively. I think how you fix this thing is, we got ourselves into this mess by not all at once. We're not going to get ourselves out of it all at once either. You've got to, it has to be a strategy where you start making a part of it and then you move back. I don't think starting at the mine is not the right way if you have no downstream off-taker for it. So you need to start at the end application and move back. That's what we're doing. And it's important that you own as much of the IP as far back as you can, but don't try to do everything at once. I was at Norfolk. That's one thing we did. It didn't work. So you really need to have kind of a disciplined strategy about how you step that up.
And also, I know peak energy, talking about lower down the electricity cost, there's a lot of elements, not just, one-time CapEx.
Yep.
A lot of is on the OpEx, on the O&M.
Yeah.
And I know peak energy, your system is very specially designed for the total lowest cost ever.
Yeah, battery
in the history.
It's similar to solar, right? Solar, 20 years ago, panels were really, really expensive. Now they're almost free. And if you look at the cost of solar power, or a watt generated by solar, most of it comes from stuff that's not the panel. It's the installation, it's operating expense and stuff like that. Batteries follow the same trajectory. They hit the same place. Now, most of the cost is not the hardware. you have to be competitive on hardware cost, and so that's where we started. That's the predicate thing. But then the real opportunity is trying to drive down that stuff above board. And I think if I talk about peak, I think the thing we unlocked is everybody else is still pretty much focused there. They're starting, I think partially because we're doing it, but like they're starting to look above the line. But 2/3 of the cost for our watts that are serviced by storage here are generated by stuff that is not the hardware. And that's why stuff like passive cooling is really important, and batteries, that's the thing that drives most of that.
One of the hopes that I have related to sort of maybe say U.S. competitiveness in globally would be that we might see a little bit of a paired deregulation movement alongside the reindustrialization movement, because I think those things need to go hand in hand. Having tried to do things in the United States, anybody who's tried to do something at any significant scale, whether that's building a factory or building a power plant or building a data center, it's just like a very humbling process of seeing every single layer, everything from federal to state to local. The red tape is just really immense, and I do hope that there's some sort of push to lighten that load, because the United States didn't initially industrialize under the conditions of extreme bureaucracy. We industrialize under a much lighter regulatory framework, and I think that you kind of see the same thing in China, which is to say that like there's just the political will to make sure that building infrastructure and industrialization is obviously it's a government promoted quota, if you will, to all of the different people throughout government. It's like growing GDP, and infrastructure is a great way to do that. And I think the incentive structures may be a little bit difficult to deal with, but those things are exogenous to Lambda, and I try not to stay up at night thinking about it because out of my hands.
Yeah, probably Brad, you can share more learnings from.
Yeah, I think this is a great question, billion-dollar question. I think in the past 20 years, I have this privilege, to work for global Chinese companies, expanding their business in North America, and from telecommunication to solar, and now in battery and energy storage. I think I have some first-hand, insights, how differently two countries, two systems approach infrastructure and energy. So on the one end of the spectrum, China built probably the most comprehensive national grid, the ultra high voltage national transmission line, the vertical integrated, grid structure. And AI campus in China, can go from design to connection in 2 years. That's amazing. So that's China, speed and scale. And on the another end of the spectrum, in the US, although we are facing some real interconnection and permitting challenges, but equally we also offer, something really valuable, and like startups, people in this room, an open innovation, system. And that's what drives US ahead, leading innovation and business model globally. And that's what we call, US innovation, decentralized and market-driven efficiency. So I truly believe, and I hope, US and China can compete in AI energy sector, but still can cooperate, but with, not a win-win, but with equal win. And that's what I learned from Nicholas yesterday, equal win. Because equal means, both US and China can bring very unique strengths and values. And if those strengths can meet and the common ground, combine those strengths together, we can move forward together faster. Yeah.
I'll take it as golden nugget today.
I mean, it's a great point. The New York Times published an article, I don't know, maybe a month ago, and it broke out what were the exports for essentially the green economy from the U.S. and China. And the main technologies that came across were, I think it was solar, batteries, and electric cars. And the U.S. pioneered all of that innovation, and then China commercialized all that innovation. I think those three markets alone are worth $150 billion in China. So it's just, the US is really focused on innovation, and China has focused on industrialization. And now, we're trying to encourage this country to remember the value of process innovation and development and industrialization. And so that is the place that we're in. And I love your vision that, if we work together, we could be so much stronger and effective, and we can both win. It does not have to be one or the other.
Equal win.
Yeah.
Equal win.
What did you call it?
Equal win.
Equal win.
But that's
I
from
love
Nicholas,
it.
yeah.
I love it. Yeah.
This is amazing panel. I know. I feel like, it's already a mic drop. Yeah, so I think I really appreciate the vision, the scope of our panelists. And I was in OCP last week. It's also the openness of the whole industry, talking about their pain point, talking about what they need, and everyone moving into the one direction. We saw the NVIDIA latest white paper. They listed out their next generation, and you will see their Gen 4. They already lined out, okay, solid-state transformer is a must-need. Battery storage is a must-need. So we already have the directions, and then now we just need to collaborate together to move faster. Probably one last question. I know we're running out of time. One last question from panelists that would be a fun one. If each of you have $1 billion to deploy, where and how would you like to invest?
I put it in batteries. $1 billion to deploy. I think energy infrastructure is the lagging thing. Price signals are going way, way up, so it's a pretty damn sure bet. It's tons of tailwind behind that, and I think the assets that are unconstrained there are the really interesting ones right now. So I guess that's why I'm doing what I'm doing.
We have a capital structure that's already, from an equity and debt perspective, over $1 billion. So what we're doing is we are, today leasing data centers and then buying GPU servers and financing those servers with credit and then leasing them out to customers. And then we're now vertically integrating down into constructing and developing the data centers ourselves from scratch, which is approximately that's 300 megawatts might be something around $5 to $6 billion total capex for that kind of a data center.
Another $1 billion question. I have a very long answer, but I know we are the last thing between you and the launch, so I will keep this short and sweet. So I would say I will invest a few things. The AI-driven smart energy storage system with the data center. So that way, data center with energy storage system could not only be the traditional passive energy consumer, but also become the active energy partner, to store energy, to trade energy in energy market. So that way you can turn the debt, cost into value, into asset value. That could be one, point. Another thing is, to invest overseas manufacture. When I say overseas, I mean manufacture based outside of China, to help our customer to navigate the uncertainty of the geopolitical situation between US and China, and also help our customer to navigate the tariff challenges. And because in the past, from my solar background, I built a factory in Vietnam, then we moved it to Malaysia, and eventually we moved that to the US. But probably it's still too early to build a large-scale battery manufacturing in the US. I think London is working on that. But at least, consider, your production base outside of China, to manage the uncertainty. That would be my thoughts.
That's a superpower of TDK. We have
Yeah.
so many global presence and then providing the resilience for our customers.
Yeah, supply chain resilience.
Yeah.
What would I do with $1 billion? Well, I like Stephen's point. It really needs to be $1 trillion. With $1 trillion.
We're talking about the grid here.
Yeah,
right?
I mean, $1 billion. It's like Landon could use $1 billion.
Inflation.
There needs to be kind of a tech-forward energy development platform. We could do so much with the technology that we have today behind the grid, right? But we do not have the financial vehicles to commercialize these advanced technologies, and that, I think, would be transformative.
Amazing. Yeah, Eddie.
I think that, it's interesting to answer the question about $1 trillion, though, which is like, if you look at the Chinese model versus the American model, and our politicians are lawyers, their politicians are engineers, their politicians are incentivized by GDP growth, our politicians have some sort of election-based incentive system, and it's no surprise that the red tape appears on the lawyers are going to lawyer and engineers are going to engineer. I think that like the interesting thing, maybe if somebody in the government hears this, it's like, invest in good educational programs in the United States, that we have an amazing set of next generation talent who are not afraid of industrialization, who are not afraid of, chemistry sets and power electronics and manufacturing, where manufacturing is not a dirty word, a next generation of venture capitalists and investors who aren't afraid to invest in a hardware business where you don't have a SaaS recurring business model. And it's fine, because guess what? So many, if you go to China, I've lived in Beijing for 2 years, and everybody knows about the Chinese manufacturing fortune. Every Chinese person knows, oh, how do you make money? You go into manufacturing. Like everybody knows somebody who's super wealthy in the manufacturing world. And that really doesn't exist in Silicon Valley specifically. Of course, in the Midwest, you go there's plenty of people who have amazing manufacturing businesses that everybody knows about. But I think that it's like the combination of like an education system, a government incentive structure that promotes industrialization, and building up a sort of, if you again, I've lived in Shenzhen as well, a Huaqiangbei, kind of situation in the United States of electronics manufacturing and industrial activity. And I think that those are the ingredients, in my opinion.
Stephen, I think you should. Okay. I think, Stephen, you should run for the federal office.
Okay.
We should.
It's a mean life.
And I also know, Landon, you are traveling to China like almost every year, every several months.
Well, right now I'm traveling here a lot, but then I'll be back on the road to China after we close this one.
So I think this is a lot of learnings that you need to. In China, we say you build a car within a closed room. So I see how important it is to have a global view, to see, have a much wide scope. This is also the reason why we're hosting the event here, to grab all the TDK teams, all the startups here. And also, Stephen, what you said, I think it's very important because we have all the big GPs, partners, investors sitting there, and our entrepreneurs, and I think invest in the future, the mindset, and also for our future education, the next generation is a fundamental key. Do we still have time for a question for audience?
There's time for one question. Graham Carey from Emerald Technology Ventures. Maybe a question primarily for Stephen. Do you see the US data center mix of the future being primarily large and central, or a mix of more small, modular, decentralized? And what are the major drivers in one or the other direction?
Yeah, it's a great question, and I think that I could see certain things like grid augmentation being decentralized. There's this company, I think it's called Base. Is that right?
Oh, yeah.
That's trying to like put batteries or something in people's, next to people's AC units in their homes. So like, great. Let's decentralize some of the power storage. Let's decentralize BESS. Let's decentralize that. I don't think you're going to decentralize a combined cycle natural gas turbine, right? You need like an H-class turbine is a pretty big thing, you can't beat the efficiencies of centralization there. On the data center side, and specifically with regards to inferencing a large language model, the decentralized stuff, any type of low latency stuff and smaller stuff is going to be on your phone, right? Those are the kind of like dumb models, if you will. They do speech recognition, maybe like extremely low latency, fast response time. So I think that there's gonna be some decentralization there. But what we continue to see in the industry is just like applying 10 times more compute, 10 times more compute. And when you are asking a question that has $100 million, $1 billion implications as an executive or as an engineer, you want the smartest model, and the smartest models are ones that don't fit on one GPU, they don't fit on 8 GPUs, they don't fit on 16 GPUs, they don't fit on 72. They need to be distributed across, and once you're there, 72 GPUs at 2 kilowatts a GPU, 150 kilowatts for just one question, right? And that is obviously going to be a centralized, massive, 300 megawatt and above sites. And that's what you're seeing in Abilene. That's the kind of sites that we're building, and that's the sites that you're seeing across the United States that are going to crop up. So I think that that's absolutely going to continue to be a large centralized thing, and not a sort of edge, this sort of argument of like, oh, well, we'll throw into like random telco data centers with 7 kVA per rack densities is obviously not going to happen.
Yeah, I think it's the same way on energy too, though, because as long as you have centralized, unless you can build transmission, and that's one of the problems in like building transmission's harder than building almost anything else, right? Because you're going super far. So and you kind of have to have both, right? Yeah, and FERC.
A wall.
And FERC, yeah. I mean, that's a big thing we could do for energy is like, but that's probably the hardest problem that we've talked about here is how do you solve NIMBY? That's probably everything else is easier to solve than NIMBY. Yeah.
Yeah, I think to echo, Steven's comments and also answer your question, we see both scenarios per our experience to work with the data center customers. Of course, you have a centralized data center, anywhere from 200 megawatt to gigawatt. For that kind of scale, you need a centralized power supply, bring your all power, bring your all capacity. Gas turbine plus wind, plus solar. Like in West Texas, you have a very affordable wind, wind, solar together. So that's a centralized, data center. We are also working with customer on modularized data center. Put everything into one container, and modularized data center, and deliver those containers to wherever the most affordable power supply. So that's another end of the spectrum. We call the, distributed generation data center. So yeah, we saw both scenarios.
Okay. Let's together give another round of a big applause for our panelists.